Welcome back to my part 2 of my top stocks for 2024. And before you watch this video, make sure you watch the first part where I speak about the diversified pyramid and the selection of stocks of up to 20 that I've selected from. And in this section, it's key that I'm giving you the last 2 stocks. But before I go there, this video is divided into 2 sections that I've pre-recorded. The first one is talking about my high risk investment. And my 2 favorite ones, one of them I'm picking very strongly, and the second one I'm watching from the sidelines. And then following on the second part, just to remind folks on the risk reward, the risk management. And most importantly, to show you how I select the stocks and how some of them made the list, but not made into my hot stocks. Watch list, yes, but not the hot stocks category where you actually try to pull the trigger. So I hope you enjoy this video and go to the next 2 parts, and I'll see you right at the end. Finally, last but not least, my high risk growth. It's very hard to define high risk growth company because I've got a set of conditions. They need to be beyond 25% growth. They need to be on a loss slowly making money, and they need to be sustainable. They need to have broad base of people. They need to have a fundamental mode. They need to be different from everybody else. They cannot be recreating. They need to be disruptive. So 2 companies I've attended for so far, and hopefully going into the future I can find more of these great gems. Coinbase and Robinhood. More I want to add, but I need to be patient in this one because you can make mistakes, and I have made mistakes in the past going too aggressive. Robinhood, Coinbase, one's a broker on stocks and shares, one's a brokerage on crypto. Revenue growth is exponential. It could go up like that, it could come down, but it could be a high riser. Long-term investment growth, they're always investing, they're competing against everybody else. They have to establish their foot. They are like the young Netflix, the young Amazon like 15 years ago. Macro impact, obviously they're the most macro impact. Anything with interest rate fluctuation, liquidity, it could just crush them to bits, and they have to survive those trends for a period before they go up. But now, I think the momentum is on their back. So this is my high risk. But for future, please do check my buy trigger, my website, or even like and subscribe and put a bell, because I will randomly sprout out high risk growth companies, these high growth companies on my shorts, because shorts is the easiest avenue for me to just go boom, share, I found information. So do follow me on shorts, because that's where I think I excel in, to give quick information rather than full-blown video like this. And now for the second part, where I've got 4 stocks that almost made the list. Should they make the list? We're going to be discussing about this. Okay, slightly different this time. I'm going to show the pros and cons. Why not? Okay, the first stock, high risk, super high growth, is Duolingo. I think Duolingo, amazing company, still a one-trick pony. Revenue, people are actually paying money now after 6 to 7 years of developing the apps. They've grown user base. They're starting to charge annual subscription, and people are paying family subscription, and they're getting value back as a customer. However, revenue is growing and now it's making profit, but my concern is the overvaluation. Yes, it looks like there's a good 40% growth. It looks like they're going to capture the gains and do something else, expand to games and maths and more like that. But we're still not visible where they're going to go. And the next one that I like, which I think is good value, but then again, it doesn't hit my stock, is Crochet. Crochet, they make peripherals, they make keyboards, they make gaming devices, they make mouse. You know, that generation of booming gamers, now, today, next generation happening. This company, do you know they make $1 billion revenue a year? And the company is worth about 1.2 billion. So it's almost 1 to 1. It's a good value, but why? Again, dilution of shares. My problem with this company is the net profit margin. They cannot make money. They charge high value for their great quality products, but they cannot make money. They are not at the level like Apple or Microsoft or Samsung. They can charge even higher pricings for their peripherals. It's a struggle. It's a struggle. Something I think if you invest in this company, Crochet, it's only you think that the likes of Apple or Microsoft will buy them out. Buy them out. That's why you invest. So do you invest high risk based on that basis? No, not really yet. And the next one that I like, I invested before, I 3.5x this stock, is Fiverr. Okay, I used to make fun of it. Fiverr, ChatGPT replaced Fiverr, but I'm using Fiverr a lot myself. Okay, there's certain things that we cannot replace. We still need manual intervention, human being. ChatGPT still got years ahead before it replaces everybody's job. My problem is great brand. I like it, great brand, but lack of innovation and decline. There's no difference between when I saw about 3 years ago and now. They don't sell like digital courses. They don't sell digital products. I mean, why? You should have known. There places like Gumtree and all these online courses booming through the lockdown. And why are they not catching up? Why are they still in a freelance economy when they have got the brand already? That's a bit disappointing. And the last one, you'll be shocked to hear this, is SMCI, Super Microcomputer. And it's gone about 10x in the last 6-7 months. It's now 1,100, waiting to hit 1,500, waiting for the stock split. Good brand, good brand. The only thing I'm hesitant is high price, okay? I think you go even higher, 25 billion road revenue, which I speak about a lot on Twitter. But I'm waiting for that innovation to spur, because they're just that one-trick pony just now, but I'm sure they start expanding. So if you invest just now, you need to have a long-term vision that you could lose 60% or you could double and triple again. High risk, I'm waiting for the right price. And that's why 800 is where I'm looking at. 1,005 is a reward. I want to have at least 3 to 1 ratio where entry, when I exit. So that's my 4 stocks that's almost hit the list. I might be swing trading, but I'm not holding them yet. I'm watching. And I have my Coin and Robinhood, which is the ones already on the list. I'm waiting for the buy trigger. This is how I manage. Remember, maximum 10% and this level of high risk. And some of them may even make so much revenue, they will get promoted down to growth. And you don't have to allocate them on high risk, and you can buy at a high risk stock. For example, Nvidia and AMD, about 7-8 years ago, they were high risk stock to me, but now they've become high growth and mature growth stocks. That's how things progress. Apple used to be mature, and now I've moved them to staple stocks. These things go evolve, company evolve. That's what we like, company that evolves and grow over time. Hope you enjoyed it. I hope you find it educational and that you can bring forward. Leave a comment below on what you want to ask, and hopefully I can come back to you. Thank you very much, and see you. Subscribe and have a good day.
Market's on a sell-off because it's spooked by the